Welcome to Fibocan's YouTube channel. I am Prabhu KB, CEO of Fibocan. As you are aware, we are into the business of enabling wealth. We enable wealth through training, coaching, mentoring, enabling clients devise their own investment strategies through our technology products and solutions, VETRI meaning victory, innovative investment strategies, so far, Sony for and Baumits. They are very powerful and efficient strategies, work on all market conditions. In every video, we discuss what happened, why it happened, what will happen, why, when and how it will happen, which is why I request everyone to watch the video till the end and click the bell icon, encourage your friends and known person to subscribe. Today is February 4, 2023, Saturday. As always, in Saturdays, we put global market videos, that is Dow, Nasdaq, S&P, FTSE, currency and commodities for the previous week. That is for the now in this video we'll be discussing about the currency commodities for the week of Jan 30 to February 3rd. That is till Friday, Monday till Friday. First we will see where the rates are. Dow closed flat, slightly lower, 33,925.06. Nasdaq closed 12,006.96, 3.3% up, while S&P closed 4136.48, 1.6% up. FTSE closed 1.7 or 1.8% up, 7901.80. So now what happened? In the weekly, as you can see, it more or less closed at the same level. What it means? It formed a doji. If you recollect, in the monthly we said that it is more or less going to form bullish engulf, but slightly difficult to form bullish engulf for Dow. And we said bullish engulf is going to be formed for S&P and Nasdaq. So anyway, we'll come to S&P Nasdaq, we will tell about it. So Dow in the monthly, it formed not a bullish engulf but slightly lower than that, and in the weekly it is forming spinning top doji. What it means? And also it formed bearish bar reversal, bearish engulf, bearish bar reversal, bearish harami type pattern, not engulf. So what it means? It means that it is moving, drifting sideways. It is not able to move up in the weekly chart. So also in the daily it formed a bearish bar reversal. However, the 50-day moving average is acting as a very strong support. We had, if you recollect, in the middle of January, we had said that the 50-day crossover has happened, and 50-day is now well above the 200-day moving average. Hence, 50-day will act as a first support. Then you have the 200-day moving average, which is below. So Dow is now in an up move. However, the short term to medium term, it looks sideways. And of course, in this month also, till now in the monthly candle, it has formed a bearish bar reversal or a bearish harami type candle, and hence we expect it to move in sideways in this month. That is what we are expecting for Dow. Nasdaq on the other hand, what did we say for Nasdaq? If you recollect, Nasdaq we said it is going to form a bullish engulf in the month of January. So January, last week's video you can go and see that. It closed by forming a bullish engulf. Thereafter, in the weekly, what did happen? It formed a doji last week. Now, it formed a strong green candle, and it is now above the Bollinger upper band. It is closed above the Bollinger upper band and also closed above the 50-week moving average. So 50-week moving average is at 11,817, whereas Nasdaq closed at 12,006. That means it is a very strong close, and also closing above the Bollinger upper band is very strong. Because it has closed above the Bollinger upper band, probably next week you can have some pullback, because normally people will take profit. But notwithstanding that, in the daily chart, if you see Nasdaq, it's on a significant uptrend. We said that last week itself. The chart is going up, the bands are going up. That is the upper band, Bollinger upper band is going up. The exponential moving average is going up. The price is in between, it is going up. Like what I call it, like a winch going up, and the person is holding the winch and going up. It's a lovely sight to see. Hence, with this progress, it has now taken out the 50-day moving average. That means it is on a strong footing, strong footing. Unless otherwise we have reversals, and again for that reversal to happen, it will take at least 2-3 weeks of solid reversals to happen, before which we see a reversal in the monthly, and before that and by this time it will go below the exponential moving average and all those things. Till such time it happens, we will see an up move, because the bands are not showing exhaustion. Simple. On the monthly chart, it formed a solid green candle till now, and just below the 20-month exponential moving average and middle band. We expect up move to combine with small pullback in this week, as we said. In the S&P again, as we said, last month, we said we expected that also to form bullish engulf. It didn't exactly, if you were to perfectly go by a textbook candlestick pattern, it is not a bullish engulf but slightly lower than a bullish engulf. So one should not interpret saying that it is not a bullish, it's more like a bullish engulf candle only. So more or less it formed that, and after crossing 200 week moving average last week, it is now decisively near the Bollinger upper band. And also this also like Nasdaq, of course Nasdaq is the most powerful from a technical perspective. The charts are looking, but it is also in the daily chart going up nicely, and the bands are moving up, exponential moving average is going up, price is going up. It's a lovely sight to see. Monthly it has crossed all the moving averages, but slightly below the Bollinger middle band. So in the daily, as you said, it is nicely riding along the upper band. 50 DMA is now moved above the 200-day moving average. The crossover has happened. That's a good sign. In Dow it has happened, in S&P it has happened, Nasdaq we are just expecting that to happen. If that happens, the upmove is intact and 2023 will be a year of US markets. But anyway, we have to wait and see. But from these levels to have a significant correction, you need strong negative news or something to come in. So unless otherwise such news is there, we will see only an upmove happening in the US markets. FTSE, we have been telling FTSE for quite some time that this is the strongest of the indices. What happened? Last month it formed a strong green candle, and now it is green touching the Bollinger upper band. In fact, in the weekly also it is touching the Bollinger upper band. In the daily also it is touching the upper band and moving up strongly. Also the 100-day moving average crossed above the 200-day moving average. So such crossovers are very good. Why it is good? That means the last 100 days it is above the 200-day moving average. Ideally a 200 days should be lower, 100 should be above, 50 should be above. It's that way. I mean, it is logical. Then that means the train is going one direction. That means it is on an upward direction with some pullback. That means it will reward all the long-term buyers. That is what it is, right? Market signifies that. These are all technical levels. So again, FTSE we expect strong closure this month also. It's because it is above the Bollinger upper band. Weekly also it is above the upper band, right? CBOE VIX, we have been telling it is at 18.33 in all time frames. It is moving down, drifting down. Weekly it is down, monthly it closed solid red candle, weekly it is drifting down, daily drifting down. So we don't see any reversal happening. As long as there is no reversals here, you don't see much of volatility in the market. I mean, many people will try to interpret VIX with something else. I don't see. All it tells about the volatility. That's all. How volatile the market is, right? Dollar index at 102.83. In fact, we said that, right? Last month itself we said 3 months of red candle, 4th month of red candle, we will see some reversal happening. Even though in this month we might close, the middle exponential moving average in the monthly chart is going to act as a support. That is what had happened. Okay, so after forming a red candle in the monthly chart, it formed a solid green candle. The selling is arrested. Also in the weekly it formed a strong bullish bar reversal and morning star, which we had expected, because last week it formed a doji, after which it opened around that level, went below the previous week's low but closed above, typical of a morning star in a candlestick pattern. And in the bar reversal it formed not a bullish bar, strong bullish bar, which is a very powerful reversal. And in the daily, solid green candle, and it is just touching the upper band, just below the upper band. However, one thing one has to be cautious, the 50-day moving average is at 103.59. that will act as a resistance. If it is able to take above that, then the 200-day moving average at 106 will act as a resistance. Of course, the crossover has happened, death crossover has happened, that is 50 is 200 is below the 50. So it has to manage. That's why 50 is coming first, then your 200-day, right? Euro versus USD. If you analyze that, it is like a Vostro-Nostro, exactly opposite that of dollar index. 1.0793 closed in the weekly. Opposite of that is it formed a evening star, perfect evening star, and also strong bullish bar reversal. What is strong bullish bar reversal? The current week's high is higher than previous week's high, but close is below the previous week's low. That means it is significantly negative. And in the monthly, it is below the Bollinger middle band. So the middle band is acting as a resistance and more like a shooting star till now. Of course, with such a negative candle happening in the weekly and also in the daily, solid red candle and moving towards the lower band, we can expect this month to be a resistance, the Bollinger middle band to act as a resistance for this month. Hence, if you recollect last week's video, don't expect significant downfall for dollar index, we said. That is why, which means don't expect significant up move for Euro versus USD. Then GBP versus USD 1.2015, same as that of, I'm not going to repeat, as that of Euro versus dollar, excepting that a textbook evening star candle formed in the weekly chart. At least in Euro versus USD, slightly the high crossed the previous week's high, but here like the opening itself was before the previous week's close. This is a theoretical textbook pattern explaining how a bearish evening star is formed. That is what it formed. USD versus JPY, it's 131.17. Here it's weekly strong bullish bar reversal. So it mimics the dollar index because it is the same, right? USD versus JPY. So bullish engulf it formed in the monthly till now, and still it is below the exponential moving average. In the daily, it has formed a strong green candle on Friday, moving towards the Bollinger upper band. It's a very powerful candle it formed on Friday. Next is our US INR, which is our interest, 82.206. Last week, if you recollect, it formed a doji. We said that last week when dollar index was falling, we said that all the components are looking strong against dollar, but USD INR is looking weak. It is really in comparison to that. That is what precisely happened. It formed a green candle, and last week it formed a doji, after which it formed a solid green candle, and it continued another solid green candle. Now it is well above the middle band and exponential moving average. So last month bearish harami it formed, but till now it has formed a bullish harami, but it is more of forming a rounding top. That means no reversal can happen. The up move is restricted, but it is not falling because at the when it is nearing the middle band in the weekly, the price is shooting up and it is getting support from there and it is bouncing. US 10-year yield 3.519. As we said last week, Jan it formed a solid red candle. We also said, if you recollect last week video, you can see that 200-day it was below 50. But about 200-day moving average. We said that 200-day moving average is going to act as a strong support. So what happened on Thursday? This week Thursday, it went below the 200-day moving average. But Friday, a powerful short covering took it well past the 200-day moving average. So that means that the breakout, one might call, happened below 200-day moving average is a false breakout. Why? Because 200-day moving average below which the Bollinger lower band on the daily chart was there. Hence it took strong support from there and bounced. And also in the monthly chart, if you recollect, we said that we also said 200-day will act support, right? On the monthly weekly chart, it formed doji long left. Still it is below the exponential and middle band, but forming rounding bottom. That means we can expect it to hold at these levels. In fact, in the monthly chart, the exponential moving average, it has taken support and it has formed something like a piercing pattern type till now. And because this level is going to act as a support, we can expect the fall is arrested. Definitely fall is not going to happen further, at least in the short term. Brent and NYMEX, let's combine this and see. 79.73 Brent and NYMEX at 73.20. So we said that Jan it is going to form a doji, second doji in succession. Thereafter it opened around the level. So normally what happens, doji means what? Indecision. One doji means indecision, two doji means even more indecision. The moment such indecision happens, then the moment the market decides to go in a particular direction, the move will be very decisive. So till now it is gone down decisively, but it has formed a solid red candle on Friday just above the lower band. In the case of NYMEX, it has gone below the lower band also. There are caveats here. One, it can continue drifting down and keep going, or it can form a reversal and short covering rally and it can bounce. Why? Because it has broken that 50-day moving average decisively, but still the 200-day moving average is holding. As long as that holds, we can also one more support that is there for Brent and NYMEX, 75.11 for Brent, and WTI it is 70.11. That will act as a strong support. What is this level? The low of 2022. See, if that is broken down, we can expect significant fall. Otherwise, we can expect it to bounce. Also, it is near the 200 week average. So 200 week means roughly 4-year average price. It's trading at these levels. So all these things might provide some support. It's very critical how in the daily chart whether there is a bounce back or a dead cat bounce that is happening. So we will observe next week. Thank you very much.